Hello, and welcome to today's webinar. I'm Ingrid Storgård with Procurement Leaders, and I will be your host. The title for today's session is Scope 3 Workshop, Where to Begin and How to Engage Your Suppliers. And as companies put more focus on reducing their environmental impact, understanding and managing Scope 3 emissions is crucial. It's a complex and sometimes even controversial area in the decarbonisation conversation. And in part, I think that's because it's one of the hardest areas to fully comprehend and to measure, but it's also the most important depending on the circumstances. And because Scope 3 extends up and down the supply chain, it is necessarily about procurement, but how do we tackle it in practice? So today we're going to explore the first step in tackling Scope 3 emissions and also discuss some strategies for engaging your suppliers in the process. I am not here on my own. I'm really excited to introduce my panel of speakers. So very warm welcome to you, Dr. Alexander Schmidt, who's the Head of Science, Sustainability and Climate Research at Normative, and also Alice Kilner, Sustainability Manager, Grant Brothers Group. So very warm welcome to you both. Really excited to have you with me here today. Before I hand it over to you guys, I'm just going to have a quick look at what we're going to be discussing today. So we're going to be looking at how can we best calculate and report on data. Why is it so difficult to measure? And also, as I said in my intro, how do you engage your suppliers? Just a quick housekeeping before I pass it over to Alex and Alice. We have a number of interactive tools available during the webinar, so do check them out. There are additional resources available during and follow the webinar, so check that out. We're calling this a workshop, and we want it to be interactive, so please submit your questions through the Q&A function and the chat function. There's also going to be a poll, so make sure that you get your answers in, because we really want to hear from you. Equally, feedback is important, so when we all wrap up at the end, do take a couple of seconds to complete the surveys, and if you have any technical difficulties, hopefully not, but if you do, check out the help section. Alternatively, you can contact us via the question box. So that's all for me. I'm going to go quiet for a bit, but I'm very much looking forward to listening to you guys, Alice and Alex. So I'm going to hand it over to you, Alex, first, please.
Thank you so much, and also welcome from my side. Really excited to have you all here with us in the audience today, and of course also to have Alice with us, who kindly joined us from Grant Brothers to share some more practical insights in the spirit of having more of a workshop, more of a peer-to-peer learning experience for everyone. Very glad that you're joining us today, Alice. We're going to get to your story, your background, and all of the amazing work that you are doing in a second. But first, I would love to give a bit of an introduction to the overall theme, because I just do not know exactly where you people in the audience are coming from and where you are standing right now. So Normative, just for some context, we're doing carbon accounting, greenhouse gas emissions accounting, which is also going to be relevant in the later on the fireside chat. So that's just for context where we are coming from. I would definitely like to know, before we go deeper into that part, where you are coming from. And specifically, I picked out one question I would love for everyone to answer here, and that is, where does your organization currently stand when it comes to ESG goals? You might be just starting out to set your ESG strategy. You might be currently focusing more on pieces like the S and the G. You might be focused on and have already commitments to tackling your E emissions. But of course, you could also already be an expert and accounting, disclosing your greenhouse gas emissions quite comprehensively. So we would love to know where you are, so that we can also tailor a bit the conversation, tailor a bit, maybe anticipate a bit your questions. So if you could kindly submit your response there, so that we get a bit of a picture and idea of where you stand. And I also see already a first question being logged. So also from my side, the encouragement to use the Q&A function. This should be first and foremost your session, so to speak. So we're going to share obviously experiences from our side, but please make the most of the time over here and share your questions, your thoughts with us as well in the Q&A. There are still some responses rolling in. We're almost at 50% of attendees having submitted. I think, in interest of time, I'll keep just a few more seconds for you guys to channel open, but then I would love to have a look at what's actually the outcome. So let's have a look. We have around 35% actually already accounting for and disclosing greenhouse gas emissions. That is great. Then we don't have to start at zero, so to speak, for that part of the audience. We also have a few, so 30% actually, so not a few, another third almost just starting out, and another third that is focused on committing, tackling the emissions under the E. The minority has indicated that they're currently only focusing on the S and the G. Probably a bit of a self-selection bias there as well in terms of who has signed up for this webinar. But it's actually a nice mix to see. We have a third, and a third in terms of the different stages of your journey there, so to speak. So we keep this in mind in our chat and really look forward to hearing more about you and your companies in a bit. Before, however, for maybe the part that is just starting out on their journey in terms of ESG, I would like to set a bit of a context here, and a context that is sometimes overlooked or sometimes painted, I feel, in a bit of a, well, wrong picture, you can almost say. Where do we stand in terms of planet? And we call this, there's a certain planetary imperative for companies to comprehensively tackle their ESG, so specifically their carbon accounting. We have already breached 6 of the 9 scientifically established so-called planetary boundaries. Those are limits, like physical limits of the planet as to what it can take on before it tips out of balance. To be honest, we just do not know what happens exactly outside of these safe boundaries. There are some models, there are some speculations, but we just know for sure that something is unstable when we are crossing the respective boundaries set for each of these 9 elements. And those are, for example, climate change, those are atmospheric aerosols, for example, ocean acidification. So those are those type of elements we're looking at here when we speak about the 9 planetary boundaries. So we're really at a crucial point right now. 6 out of 9 have been breached, and there are real world business implications for having breached these limits. We see this in disruptions of supply chains all over the world. So it's really, really important that businesses are taking this seriously, not just as a side topic, but as a core of their business. Regulators are catching up on this, not just because they have committed in certain forums like the UN to achieving certain climate goals, but also because they do see that in their jurisdiction, companies need support and also guidance, and this often comes from regulation. So I just listed a bunch of acronyms here, throwing them at you. We could dive more into them in a bit, or maybe in the Q&A. I assume some of you are familiar already with quite a few. So on the left-hand side, I outlined the UK, the major UK frameworks. On the right-hand side, we have that for the EU, pretty much always corresponding to each other. So for example, we have the SECR in the UK, and we have now newly emerged in the CSRD in the EU. Interestingly, the IFRS is overseeing a lot of this work more and more through their Sustainability Standards Board. Again, just throwing this out, we can dive into detail here, but this is not meant to be a webinar on legislation. So just showing that companies will also have to start disclosing from a regulatory point of view more and more. And if neither the planet nor regulation can really nudge you, I think these numbers might be a wake-up call for many. So we alone in 2023, we incurred economic cost globally due to natural disasters of around $250 billion US. Estimates of income loss until 2050 amount up to 19%, equivalating roughly 38 trillion US dollar. And the actual cost of emitting a ton of CO2 is estimated to be around 185 US dollar currently, and oftentimes it's not priced in. So we kind of buying from nature, or like lending from nature without repaying. And that, of course, leads to a big gap there as to what we pay for products and services, for flights, for example, for driving our cars, and what's the actual cost of that service provided to us. So economically, we also need to act in order to, pretty much sustain our businesses. So sustainability literally as the ability to sustain your business in the future. I think that's an interesting way of maybe rephrasing it for yourself. Now, many of you, we saw, have already started down your ESG, your sustainability, your carbon accounting journey. And many of you also have probably already encountered the first few bottlenecks, questions, and challenges. We mapped out a few of those questions that are likely relevant to you. If I had to just summarize them, it pretty much comes down to data challenges for many of you, especially in this so-called scope 3, so in your value chain emissions. And I try to simplify a bit the picture here for you as to what we see is right now happening and where we collectively as a market need to go. So emissions reductions have to happen based on good data, and Alice will tell us more about this from a practitioner's point of view in very short moment. Many start out, and that is great, with looking at their procurement at their spend data. And that gives you a first good indication as to where are the bulk of my emissions coming from. So likely in terms of suppliers, regions, sectors. That's a very good starting point. If you just think about it, however, if you just look at your spend amount and then translating this into emissions, like how many levers do you have to pull? Well, you can spend less money, but you probably want to keep growing as a business. So it doesn't give you the level of detail needed to really take targeted action, unless it's very obvious what's the spend category and what are the outline actions there. So you want to move towards the right-hand side of this picture. So from spend towards activities, meaning what type of material, for example, have you bought, to supplier data, so really asking suppliers, I need to know what kind of electricity mix, for example, you use in your production, so that I can also help you to understand how you can lower my emissions as someone who's buying from you those manufactured goods or services. And ultimately, in the leader category, we really want to go towards product level data. So really knowing what went into a specific product, and then you have a lot of information, a lot of granularity available to you from which you can really start to take action. Now, it's a journey. It's not at all that we're all right now at the leaders level. Honestly, the market is also not there yet in terms of data availability. Again, Alice can probably also speak to this in a minute, but that's where we have to go. So we have to start somewhere. Spend base is great, and we have to move towards more and more granular data. And that, of course, can be achieved with a platform such as Normative and through engaging your suppliers directly. Once you've done so, you will uncover it is not just about ticking the box for regulation, about avoiding some catastrophe in terms of planet or economic cost. You will actually see how much value is to be found in the data across different disciplines. Of course, procurement, that's the forum here, but you will also see product design, material composition. There are a lot of efficiencies to be gained when you understand the carbon content of your products. Transportation and other facility management areas can also benefit tremendously from this kind of data. So it will move more and more from a fringe, well, it's nice to have, towards the core of your business. Again, the idea of sustainability being the ability to sustain your business. Now, there was a lot probably that I threw here at you. It was meant to be an intro, and I'm very happy to, of course, come back to your questions if you have any. So we're here now. I'm also available to you after the webinar, so you have my contact details here. But I am more than happy to now welcome Alice on stage, so to speak, virtually here now. Alice has already been introduced as a sustainability manager of Grad Brothers in the UK. But I would actually love for Alice to quickly give you the stage and an intro to your person and your work before we dive into some more fireside chat style questions.
Yeah, hi everyone. So, as Alex said, I'm Sustainability Manager at Grab Brothers. We are a building services company in the UK. We're a group of companies, the largest one being our mechanical and electrical engineering. So, largely meaning we're coming into construction sites in that fit out stage. We're working on in the data center market a lot at the moment, but traditionally in sort of commercial builds. And we've been working with Normative on our carbon accounting journey for 2 years now, just over 2 years actually. So it's been really great to get those insights into it, and it's what I lead within the business. So happy to be here talking about it today.
Thanks so much for the intro, and also maybe worthwhile mentioning that you've been founded in 1946. If my notes don't lie, so you've been around for quite a while. I think that's also important for everyone to know.
Family owned, 1946, and we're at about 500 direct employees now.
Amazing. And can you just expand a bit on your role? You mentioned it briefly, but expanding a bit on how your role of sustainability manager is also integrated into the overall organization.
Yeah, of course. So there's two parts. One part being more of the sort of environmental compliance side of things. So we have to ensure that what we're doing as a business isn't having a negative impact on the environment. The other side is that corporate sustainability, net zero journey side of things. And it's really integrated into the group. So my role sits as a group function. So it's across all of the different companies. And we report into the HSEQ team, CSR team, our own team, and then through coordinating groups and volunteer green groups, we report both up and down through the business as well.
Great. If you don't mind, just share with us a bit where your whole journey started, your sustainability journey. You said we are working now together, so Normative and Grad Brothers for about 2 years, but how did it start for Grad Brothers to begin with?
Yeah, so we've always been aware as a company that we work in an industry that has a big impact on the environment, that's very involved in issues on the planet that are going on. So it's always been something that we've had a strong focus on. Protecting people, places, and planet are our key pillars. So planet and places both really falling into these categories. Under that planet function, we've always traditionally upheld like our ISO 14001 certification, and we've then in more recent years made sure we've undertaken that mandatory reporting when it comes to carbon, so that SECR reporting, for example. But that's looking at quite a small portion of the data. And what we realized, about 2 years ago, 2.5 years ago, was that we needed to do more. We needed to understand that full footprint if we wanted to keep being a leader in the industry and driving it forward. We needed to be taking those extra steps ahead of what currently has to be done in order to drive our understanding. So we came to this journey.
I think that's such an interesting realization, and one I hope also encourages other companies as to, you did the mandatory thing, you did the kind of bare minimum, let's clear the bar, but realizing also if you want to be a leader in this space, but also if you want to set up your business for future success, there's more to be done. So we talk here specifically about the scope 3 topic, right? That is, of course, the daunting task for most. It's usually where 90% plus of your emissions are allocated at, and you bravely took on that journey. Were there any, or what were some interesting or surprising findings that you got when you had your first complete overview of your corporate emissions?
Yeah, so we've always been aware of our scope 1 and 2 impact. So luckily quite aware of where the sort of hotspots are there and what we need to be doing to reduce it. But once people started working with Normative to understand our full footprint, we knew scope 3 would be a lot, and then it was 97% in that first year of calculation, and it's continued to be 96% around that mark each year that we have then calculated. We knew it would be a lot, so that wasn't the biggest surprise. I would say it was interesting for us to see the impact that the sort of smaller categories have on our carbon footprint. So, for example, waste. It's really interesting to actually directly attribute the waste that we produce in our offices, on our sites, across the business with those emissions. And having that data allowed us to partner, or drove us to partner with different companies. So we now partner with one company who take back all of our used like floor and wall protection material. They remanufacture and they resell it. So we then buy that new material from them. So it's a closed loop. And another where we're looking at like where our wood waste goes and ensuring that is completely removed from the waste stream to start bringing that category down. So it was interesting to be able to look at those small categories, sometimes the easier ones to influence and make those changes. I'd say we were, from a Scope 3 perspective, surprised at the impact of a few suppliers. So something we've always talked about before we did anything was we've got such a huge supply chain. We've got the group of companies, we're in an industry which uses a massive supply chain in construction, in fit out. And we were worried that would make this super challenging. You've got a lot of people to interact with and talk to and bring on this journey. But actually, and this is in that first year, the top 10 suppliers group wide accounted for 40% of those Scope 3 emissions, and the top 2, 20%. So we were in a position where actually just impacting 2 to 10 suppliers, which is a much easier task than we were anticipating, could have a massive impact. And we were genuinely really surprised that so few would have such an impact. Obviously, currently, and that was based on spend data, but it gives you a much easier starting point than we anticipated that we would have, which was excellent.
That is interesting. So both from the starting again at the beginning, just noticing the sheer impact at Scope 3 or relevance of Scope 3, even though you kind of had the feeling already. But if you just look at this huge difference, you did Scope 1 and Scope 2 before comprehensively, got that covered, feeling good about it, and then realizing 97% is actually not there. It's actually my Scope 3. I think that's the first one. Then you mentioned, okay, interesting to have a drill down to the different categories to really see where we can take more action, partnering up, maybe actually quite low-hanging fruits. And then what I also hear again and again from other companies, interesting for everyone here, I think to can emphasize and realize, yes, I might have even thousands of suppliers, but actually it might be that a handful, 2 handful in your case, account for the majority or at least a large chunk of my Scope 3 emissions. And then if you say 2 suppliers, 20%, I mean, you can call these guys up, right? This is really, really something actionable for you to engage and then really have an impact for. Great. Moving on, I'm not sure if it's my screen. Oh yeah, now you're back. Okay, sorry.
I lost you a bit there, Alex.
Sorry,
yes.
we're frozen there. This all sounds great. I also can imagine there have been some challenges along the way for you. I mean, I sketched out in my little presentation a few questions that many companies face. What were some obstacles? I mean, Scope 3 by definition also is not really in your control. Were there any challenges that you can share with the audience? Not sure if you've heard the question. Seems to be some connecting problems. Is it on me?
I'm wondering if we've lost Alice for a minute here.
Yeah, I think Alice is back.
She's back. There she is.
Sorry everyone, I'm back. I have absolutely no idea what happened there. Apologies. Would you be able to repeat the last question?
No worries at all. I would love to know a bit more about, if you're open to share some challenges that you encountered, especially in Scope 3 as, by definition, they're not under your control immediately. You mentioned a few kind of options to have quick wins as to here a few suppliers you can engage, but maybe you want to share a bit for the audience, challenges that you encountered.
Yeah, so I'd say challenges in terms of getting to this point of engaging and calculating that full footprint. Obviously, it takes time, it takes that partnership, and it can still be a challenge to demonstrate that commercial benefit. Obviously, got a company that is very on board with doing something positive and responsible, but it's got to fall in line with the business growing and the business commercial side of things. what we found was that when we actually looked at those top clients and customers that we work with and what goals they've set with regards to net zero and supply chain and how much work we do with them, we were able to relate sort of the benefits of having our own strategy and falling in line and aligning with what they're doing. We were able to relate that to the commercial side, to a financial benefit, and drive it through that way. It's been difficult in scope 3, I would say, as another challenge, as we're trying to move away from that spend-based data. It's a real engagement process, and I think one of the key learnings has been, like, we're very early on in this process, and it's got to be patience being key. Some of our suppliers haven't started, so we're able to support them in that process. It's that realization you're not going to get all of the data that you want right at the beginning. It's that real drive and working together to get it, which helps you face that challenge, but brings everyone along on the journey together. And we found that actually coming at it with that approach has really allowed us to have good interaction with suppliers.
Great. No, thank you for sharing that. I think something that, especially for that third of companies who have already disclosed and engaged, I assume also their supply chain, something that probably will resonate with them. So now that you have, the comprehensive overview, you started to engage some suppliers or work with them a bit more closely, get some more granular data. What is next? What is next for Grad Brothers in your general sustainability journey?
Yeah. So continued supplier engagement. So we've been utilizing sort of normative tool for suppliers to input their data. So we're continuing with that. So not only is that now focusing on those top 10 for each company, but we're including it in all of our new supplier questionnaires. So in order to come onto our supply chain, answering that survey, which indicates where you are with your own supplier net zero journey, where you are with calculating your emissions and setting targets. So we're really continuing to improve that data set that we've got about where our supply chains sit. But we're also going to focus really directly on those top ones, as I mentioned. So the top 2 from each company across the group, we're engaging with them directly. So we're having meetings and calls. We're including managing directors from this side, that side, in order to make it a priority that together we can understand the data, but also we can understand where their low carbon product options might sit. It's gone really well so far. We've been able to identify, for example, some low carbon steel products that we weren't aware of before, and then we can take those and present. So the other side, and something that is really a focus now, is that engagement the other way. So client engagement. So where some are really on top of it and really pushing for sustainability in every job we're doing, not all are aware of the options. Not all are necessarily aware of the impact. A lot of the time we're installing something which has been specified, we must install this material, but we're able to go back and present a better option now. And having those conversations, I think that way, that engagement is important too. Firstly, it shows that we're on board and we're really going with this, but it also gives them options that they might not have heard of, that they can start spreading out. And I think the key thing we've learned over the last few years is just about engagement and education at all levels. So within the company here, so within Grad Brothers, ensuring that there are people across the board who understand what we're trying to do with regards to net zero and can bring it into their everyday roles. It really can fall into anyone's job. So pushing that, and then supply chain engagement, client engagement, and all of that comes with that side of education and awareness as well. That's really been the key.
So what I hear actually is a lot about communication, right? Both externally with suppliers and internally as well. You have to make a bit the case, why are we doing this? Why is this relevant? Engaging your peers, your stakeholders, your colleagues. So it seems to be very, very much important there. I think you already provided a nice wrap up, a nice kind of some summary. Because you also mentioned the reporting requirements, the SECR in the UK, we have in the EU dropped the acronym CSRD before. If you were to maybe sum up both your recommendations, but also, especially because I think many companies, at least right now, have regulation disclosures on their mind as, you know, the big threat, so to speak, or the big unknown that they have to somehow conquer. Do you have any like sum up advice for companies, where to start, what to do with also the regulatory side?
So I would say, I was just to get started on the data. I think it's going to be impossible to get anywhere with the reporting and regulation side of it if you don't have it. I think it's about going with it, even if it's not perfect to start with. You know, we started with a completely spend-based data set for Scope 3, and each year we are gradually chipping away from that. But if we'd waited until we knew we had a whole set of hybrid or activity or supplier data, it would have been years until we were able to actually understand our full footprint. So I think it's about like accepting that this is a real process. And at the beginning, it might not be your ideal, beautiful data set, but it is something that you can report on and start making changes from. And without it, you can't start making those steps. Having that data allows you to be transparent, and as long as you're sitting and honest about how you've calculated it and where it's come from, then you're in a really solid position.
Perfect. So get started, don't wait for the perfect, and of course inform yourself about regulation, but in general, it will be all about having the right data points at your hands to make sure you can fill them into the right questionnaires, the right reporting templates. So that's definitely one, I think, for everyone to take away. With this, I want to thank you for now from my side, Alice, for joining us here, for answering all the questions, giving us some insights into your work, into Grad Brothers, and thinking around the whole topic. And I would then hand it back and look forward at to your questions that we see already are rolling in from the audience.
Yes. Yeah, thank you so much, both of you. That was really interesting to listen to you. I see there's a few questions, some comments that come in here, but there's one. And I have some questions myself, but there's one here that came to you, Alice, as you were talking, which relates to which tools did you use to calculate how much percentage emissions your suppliers, or what percentage of emissions your suppliers contributed to?
So at the beginning, our supplier emissions data has been spend-based. So, well, the calculation is done by Normative, so Alex might be best placed to answer this. But we've got, aside from the spend-based method, so we're looking at how much we've spent with them and what emissions category we've spent that in. Aside from that, we're asking for their data, which can then relate to revenue, so can give a bit more, but it is really just based on the data that they can provide us, and if not, then spend. But Alex might be able to answer that slightly better.
I think you already gave a good overview there. I mean, from Normative's platform point of view, usually it is a good place to start with the spend data, because this is data that is usually readily available in your organization. So you have your procurement processes. It's pretty much, you have invoices, you have receipts that you collect, and we can, with our engine, translate those expenses, those financial flows into equivalents of emissions. High level, of course, going to be averages, because we just don't know more at that point in time, and that's when Alice's points come in as to supply engagement, or getting a bit more granular as to not just a spend amount, but then actually activities. So you move from, I paid 1,000 euros, pounds to this certain supplier, to actually I purchased wood or plastics from that supplier. So then we can get more granular. And ultimately you do want to, that was my picture before, where you move towards more and more granular data. You want to then move towards supplier-specific data, which is where you will have to engage the supplier to get more information around their business.
Yeah, thank you so much. Another question that just came in, just trying to read it here. Does carbon offset projects and emission reporting should be at the start? I guess, should carbon offset projects and emission reporting be started at the same time by a company?
I have my point of view there. I can share that. So how to put this best? So it is a controversial topic in the sense of it shouldn't distract from the reduction work That would be my high-level guidance to you. I think it's always great when you are looking to invest into solutions that restore nature, that help to capture carbon, that are honestly also in the interest of scaling those solutions, because many of them need more funding, they need to get more cost efficient. So by all means, I would encourage you to go there. Be careful, however, because there's a lot of, quite honestly, junk out there in terms of promises being made as to offsetting of emissions by certain solutions that have not proven its value. And then the danger is not to support these projects because they might have the best of intentions. The danger is then if you make claims or base your strategy on these credits that are provided or issued. So we have a lot of reports out there that have shown, unfortunately, issued credits not delivering the value. And then companies, big companies, have made claims as to we are now, quote unquote, carbon neutral based on these offsets, whereas they have not done enough reduction work to actually support those claims. So while we don't disencourage to invest in what we call in climate solutions, we would highly encourage you to first and foremost focus on your reduction strategy, because in our spirit, in the scientific spirit of net zero, it means reduce as much as possible, about 90% at least of your baseline emissions, and then only for the remaining, the hard to abate, the almost unavoidable emissions, those you can then use high quality, high permanence carbon removals for. It's a huge topic. I'm happy to dive more deeply into this, but in a nutshell, that's my take on the topic.
Yeah, great. Thank you so much. And another question here. I think I should have brought my glasses because it's very, very small in the chat box, so do bear with me. I think there's two questions in one here. Is there a comprehensive list of standard emission categories which we can refer to when looking to categorize our organization's Scope 3 emissions? And secondly, how do you have typical strategies to work with respective suppliers in these categories? And secondly, do you have typical strategies to work with respective suppliers in these categories? Sorry. Does anyone want to go first? You go.
I mean, from a standards point of view, and then maybe practitioner's point of view, Alice can of course share also more. The greenhouse gas protocol is the short answer to that is the standard right now. Admittedly, is an incomplete and imperfect standard, but this outlines Scope 1, Scope 2, Scope 3 as the big terms. Scope 3 then has 15 subcategories. Alice mentioned already a few of them. Waste management, for example, is one of them. The big ones are, for example, purchased goods and services. That's a big one for many, many companies. So greenhouse gas protocol, the gold standard as to how emissions are classified and categorized. And then reduction initiatives, we have, from Normative side, we have standard ways of exploring categories. Honestly, a lot has to happen in dialogue with the customer because it's not a one-size-fits-all. And as just mentioned a few examples where you have, maybe also surprising insights. I have another one from another industry where we saw a certain category in plastics, but the business was actually in finance. It was like, why is plastics relevant for you? Well, they issued cards made of plastic, and that was in the financial industry. You can imagine what kind of cards those have been, and that has been a very impactful category for them. Because they just don't have many other physical goods. So business insights combined with the data, and then the categorization helps to identify the right solutions for reductions. I'm not sure if Alice wants to add anything there.
Yeah, I would just say very much it is what we've found is it's been a different approach with most suppliers that we've spoken to, because it really depends where they are on their journey already, whether they've started, whether they haven't, the size, exactly what they do. I would say it's just the standard strategy would just be about that engagement piece, about breaking it down to those like easily manageable numbers of suppliers and starting that process of engagement. You might find that they've got loads, in which case you could maybe collaborate on promoting a low carbon product, but it is going to be different each time, very dependent on where they're at.
Yeah, absolutely. Another question has come in. Thank you everyone for submitting your questions. Love it. Keep them coming. We have some time still to go, so do do pop your questions in the chat, and we'll do our best to answer them. What is the best tool to calculate Scope 3 emission for an organization's supply chain based on spend and carbon factor? And does that mean reduction in price reduces emission?
I might be a bit biased here.
Yeah.
As Normative obviously provides those services. There are different tools out there. There are different platforms. They have different strengths. They have different focus areas. Some are very, very vertically focused on a certain industry to really be tailored to certain needs. Normative takes quite a horizontal approach, however, is kind of adaptable to pretty much all industries with a level of granularity that is not paralleled by many platforms. It's really important for us, and it's part of my role, to ensure the scientific integrity. So kind of really the objective view on this, make sure whatever platform you pick, they show the right amount of scientific integrity, because I saw mentioning here carbon factors, so probably referring to those emission factors, especially when you are on those like industry averages. You have to make sure you have the latest ones, you have the fitting ones, you have scientifically vetted, peer-reviewed ones. That is all ensured within our carbon accounting engine. So that would be one tip there. If you are a very, very small entity, just 2 or 3 organizations, we have co-founded the SME Climate Hub that offers a lot of great tools for really small businesses to just get started, to just have some free resources and free tools. So I can recommend checking that one out as well. Again, it's the SME Climate Hub, co-founded by us together with the Green Business Coalition Exponential Roadmap, supported by the UN Race to Zero. So you have a great set of resources there if you're smaller. For big organizations, obviously, a company like Normative is a great hub to approach.
I guess
sorry,
you go. Go.
Apologies.
No, sorry.
I was just going to say on the second part of that question, yeah, it does mean in the point where you've then got spend relating to emissions. We've had conversations about this due to our spend increasing, meaning our emissions where they're spend based increase. But you can start looking at this like as an intensity value. So while you're looking at spend based, that's what we've looked at. But ultimately, it's still a good place to start, even though, yes, it does get impacted, obviously, by how much you spend.
And I guess just to you, Alex, there's a question here. Does Normative have the capabilities to calculate other categories in Scope 3 other than purchased goods?
Yes, 100%. We cover the entire greenhouse gas protocol catalog. So as mentioned, a few categories already. So yes, this is super, super important for us, for our clients, to provide the comprehensive coverage. We're going to cover all of your footprint, all of your emissions, all of the categories. So yes, very, very much important. Do not just focus on one category. You have to get the holistic picture first. That's what we offer. And then you also zoom into the subcategories. And there we have more to, sub dashboards, drill down abilities. Again, Ed has mentioned a few of them, but it's so important that you capture all of your scope categories and subcategories.
Great. There's a question that actually, Alex, and it omitted me. If you could just repeat one of the names of the tool that you just mentioned in the previous question. There's a question here. Someone didn't quite hear it.
The platform is called the SME Climate Hub.
Perfect.
SME Climate Hub. I'm not sure if I can share it somewhere. I don't think there's a chat here, but if you Google, so small, medium enterprise, that's what the SME stands for. SME Climate Hub is for small organizations, I would say below 50. I mean, officially definition is 250 employees and below, but many tools are specifically tailored towards 50 employees or less. Large organizations might already have some more demand, in which case we're happy to talk to all of them, obviously, but the SME Climate Hub might be a good place to start for small entities.
Amazing. Thank you for mentioning that again. Lots of questions coming in. Really great to see the engagement. Do you have any information about the major initiatives in the IT sector to reduce emission? So IT sector could include cloud providers, hardware, and software and IT services.
I mean,
I say,
yeah,
we work a bit in the sector, I guess. If you're like across our group, we do have some interaction, but it's very specific. I'm not sure I can comment on like too much of it in a technical enough way to answer the question, just because it's such a specific sector.
Yeah. I mean, it's already been a bit outlined here, obviously, in the question. So IT sector could include cloud providers, hardware, servers, laptops. So you have, of course, to distinguish that between kind of the pure server providers and what have you, in which case it's a lot about electricity, right? It's a lot about how are servers being powered. For Normative, for ourselves, obviously, we also have we do our own carbon assessment. And there a lot is around our servers, like how do we, when Alice is running analyses, Alice looking at the dashboards, it's somehow servers have to be powered there. So energy for the servers is crucial in that sector, or energy consumption in general is going to be one of the big impact categories, and we can make a huge change when you either through your provider opt into a more sustainable, more like renewable energy solution. Sometimes providers do offer that. Or of course, switching suppliers or what have you. The second part here is then hardware. So when you talk about the laptops or other devices, again, also for Normative, when we purchase laptops, there's going to be a certain carbon footprint associated with the production, the manufacturing of those laptops. So also there, you might have certain providers that have, by design, a better kind of a less carbon intense production means, or you just have to engage suppliers and see what could you tweak potentially, or what are their plans moving forward to work more in the value chain, maybe to localize a bit more the production, reduce transportation ways, or switch to less carbon intense modes of transport. So those are the two areas, like hardware, software, where I would see are the most impactful measures you can take. But to mention that, maybe just as one comment there, it's not just that we give Alice a license key or others, and they can engage in the dashboards. We have dedicated climate strategy advisors at your hand, at your guidance. I think that's so important to mention because it's such a huge field. It can be very complicated. So if you are from the IT sector, for example, don't just take my high-level blurb as kind of that's all there is. We have experts who guide reduction initiatives together with you, look at what are the right steps for you to take. So that is crucial for us, in addition to the service, the platform, to have also additional services around that help you to take meaningful steps, identifying the steps and then taking them.
Absolutely, and thank you both. Questions keep coming here. We've got a good just under 15 minutes left, so keep popping your questions in the chat. There's a question here on what's the best approach to get primary data, so supplier emission data. Are there any preferred third parties who could get such data?
Do you want to share anything about your experience, Alice, or should I, from a high level?
Yeah, I can. So with the, not the salesperson, but with their supplier engagement module on Normative, you are actually inviting suppliers to provide that data through that platform. So it can directly go into there and also get checked through that system. So for us, that's worked really well. We've got all of our data in there and we've been able to engage suppliers and then provide their data through there. As a company ourselves, we've provided data through a number of others, including CDP. So there has been others where we've been requested to disclose. But for us, we found this quite a good approach also because a lot of our supply chain isn't quite very far along in that process. Doing it in this way of it being a survey allows there to be more to it than just providing the data. So there's opportunities for them still to highlight the good things they're doing, even if they don't quite have the data yet. So that's worked well for us, and it's allowed us to, in quite a lot of cases, gain that data.
And a crucial piece about data, and as you mentioned before, is really data quality. You sometimes get it in very much different shapes and formats. You have different maturity stages of suppliers that you have to consider. So having into one platform that helps you to also kind of filter through data, analyze data as to consistency, and puts them in the right format for you to be useful. That's something that of course offered through our platform there. You mentioned CDP. That's of course a project that a lot of companies are disclosing to. It's however quite big of kind of an effort to be made for smaller companies, smaller suppliers specifically. So through normative engagement tools, through what we call the carbon network that we are building out in our platform, it's quite easy to get the right data at the right level of granularity and quality-wise throughout the entire supply chain. There's not, that I'm aware of at least, and I should know, no like big public repository that's reliable, transparable, accessible, where we have kind of global data. That's then more like those emission factor databases where you have industry average data. But supplier data, you have to engage suppliers through a well-connected platform like Normative.
Yeah, absolutely. Just going through the questions here, so bear with me. What are the best supply chain sustainability or climate change certifications for supply chain professionals? If anyone wants to take that.
I can take a first step, because interestingly, so we were part of and co-founder of an initiative called Carbon Accounting Alliance. And one of the topics we just discussed there is that, for example, for carbon accountants right now, there are a few certificates that are interesting, like the Greenhouse Gas Protocol has like certain trainings and offers there. However, the industry, of course, is quite new, so it's not as much regulated yet as financial services. So you should look out in terms of carbon accounting that you do follow the Greenhouse Gas Protocol as a standard, that companies have the ability, for example, or positive track record with the Science Based Targets Initiative to submit your science-based targets and have them verified by this external party. So those are for carbon accounting professionals, so to speak, are important standards, important gold standards to align with. I wouldn't say there is the one certificate that you should have or get, but that for carbon accounting, gold standard is Greenhouse Gas Protocol.
Great. So a couple of questions here relating to the platform. What sort of spend model is used for your platform? A license, subscription, one-off fee for baseline, etc.
That was a bit too fast for me, but
sorry.
Could you just repeat?
I'll slow down. What sort of spend model is used for your platform? A license, subscription, or is it a one-off fee for baseline and so on?
Okay, so because I first understood the spend model used as the carbon accounting spend method, but I understand a bit more now the question as to kind of what's the overall business model. Let me just tackle both quickly, and then I hope I captured the gist of the questions. So in terms of Normative platform, it's a license subscription-based model. So you have usually annual subscription. These can change, obviously. Where you get, because most companies do report annually, right? So you get then kind of annual package access to calculation services, etc. Everything is, a bit tailored always to the needs of a company. So, but in general, that's how the platform works. So it's not like a one-off, here you go with your carbon footprint and that's it. As I said, we really want to be partnering with you, really want to take you by the hand, learn your business, learn to get to know your business more, and then together embark on this journey, closely in collaboration, not just as here's a software, off you go. If this first part, the spend model, was more as to kind of what's the underlying methodology, so as Alice already pointed out, like we have the basic, spend-based approach based on environmentally extended input-output data models, if you want to know that. So it's these databases that outline industry average emissions associated with a certain sector, region, spend amount. But then we go through the different methods of the Greenhouse Gas Protocol, activity-based data, hybrid method, up to supplier and product specific. So we cover the entire range I sketched out on this one slide through our value chain engagement feature and then calculation methodologies.
Thank you. And so far we haven't really touched upon AI, but there's a question here. How do you use AI in the platform? And if so, can you explain how it's utilized?
Of course, no webinar should come around the AI topic. It has to be somewhere there, and I mean it very in a positive sense, because it's of course empowering us to do a lot more things faster. So for example, for data cleaning, for data analysis, we do use certain learning models if you want. Increasingly, these models are of course deployed. You see this already with ChatGPT and the typical ones outside of our world to just answer questions as to how could I, for example, reduce my emissions in a certain category. I'm sure it will also spit out something over there. So right now in the platform, the main focus really is about data quality, data assurance, kind of making sure all the how you say, like the T's are crossed, the I's are dotted. Increasingly, it will also be used for, of course, more and more advice giving. But right now, we really want to make sure you get the right amount of human support there because it's such a new field and it's dangerous to recommend the wrong things. So for recommendations, right now, we use a lot of our expert knowledge instead of AI, but we continuously improve and increase our kind of automated learning capabilities together with the human in the loop. We do believe both in an interaction is important.
Great. We've got about 5 minutes, so time for one more question, I think, or maybe two. If you're quick putting them in the chat. There's one that came earlier, which I guess relates to kind of supplier, engaging the suppliers and their competitiveness. So if you learn that one supplier is using a great carbon reduction initiative, you'd want to use that information to encourage other suppliers you use. Sorry, I'm losing the sound there. Forgive me. Can you guys hear me?
Yeah.
You can, sorry. I'll start again, and I wasted about 20 seconds on that one, so sorry for that. If you learn that one supplier is using a great carbon reduction initiative, you'd want to use that information to encourage other suppliers you use, where relevant, to use that option. However, would suppliers then not be willing to, or be unwilling to share that information with us at risk of losing competitive advantage?
I would say what we found is, I think one of the key things we always talk about in sustainability, and obviously with others that work in it, is it really depends on collaboration. All of these topics, however far you break them down from a global, local company, however far you go, you won't get anywhere without collaboration. And Scope 3 is an example of that, because we need our suppliers to reduce, they need their suppliers to reduce. We all need to work together. And I think that there is what we found a really good awareness of that once we started engaging with suppliers. So there hasn't been that. I think that they're using it as a competitive advantage. So coming to us, and when there is a low carbon alternative, for example, really selling that to us. And with some of them, we've been able to, they're asking for like exclusivity on a product because theirs is the low carbon version. And we are looking into those sorts of options to drive that use that competitiveness to actually drive others to change. So I think people are seeing it. Yes, there is that competitive side, but it is an advantage if you can, particularly in industry where it might just be starting out, if you can be one of the first, if you can promote what you are doing, you're actually giving yourself an advantage. And we have to work together. If one person just does it all, they'll be there shining and everyone else won't be able to get anywhere. So it really does depend on collaboration. We try and really push that message as well.
And I actually love the implicitly in the question here, and also of course in your response, Alice, that increasingly people do see the competitive advantage of being sustainable. And I love that. I love that spirit that comes through, even though it wasn't intended here. But as I kind of open this whole thing, to see that it will really drive business value to find out lower carbon solutions, for example. It's reducing cost, it's getting more efficient. All of these things are baked into a proper sustainability strategy. So I love to see that kind of, just to my own interpretation, my own view on this question. So it's encouraging to hear that as well.
Absolutely. We are out of time. Thanks to both of you for joining us today. It's been a really fascinating conversation, I think. And the topic is just one that resonates so well, and it's really, really important. So thank you both for joining us on this very horrid Thursday, if you're in London. I hope it's better for the ones who are not. But yeah, thanks so much. Thanks for everyone for submitting your questions. I think we got through most of them. But if not, don't worry, we can follow up with you directly. But that's all for me for now. But yeah, thanks so much, Alice and Alex. It was great to have you with us here today.
Thank you.
Thanks so much.